Investors know it's been a turbulent time on stock markets since Donald Trump returned to the White House back in January. And Tuesday saw another record being set. Gold surged to an historic high of just over $3,500 an ounce on the global spot market. And that price increase comes after sharp losses across stock markets following Trump's tariff announcements. Investors are looking for a safe haven, and they are turning to gold. But the volatility in the markets has also been fueled by Donald Trump's public criticism of Federal Reserve Chair Jerome Powell. Trump has called for an immediate cut in interest rates. The president also labeling Powell a major loser on social media on Monday. Last week, the White House economic advisor said the president and his team were studying whether they could fire Powell. This escalation has raised concerns about the potential erosion of the U.S. Fed's independence. Here's Donald Trump speaking on Friday.
Prices are coming down, not going up. Only the fake news says they're going up. The only thing that's even are interest rates. And if we had a Fed chairman that understood what he was doing, interest rates would be coming down too. He should bring them down. Yeah, please.
Well, I'm joined now by Sandra Navidi. She's the CEO of the New York-based advisory firm BeyondGlobal. Sandra, it's good to see you again. So I want to start with maybe the big picture here. How much of the current gold rally is directly tied to political risks, i.e. Donald Trump?
Everything circles back to Donald Trump's policies, or I should say the lack thereof. Donald Trump, with his unpredictability and policies that don't make sense, have unsettled investors. And historically, the United States has always been a safe haven in terms of crises, in terms of financial risks. Investors would take refuge to the dollar-denominated assets, treasuries, and that doesn't work anymore. And that shows you that there is a flight, a longer-term flight out of U.S. assets, which is very disconcerting.
Yeah, I mean, we are seeing U.S. Treasury yields spiking yet again alongside these gold prices soaring, usually seen as opposing signals. What is the bond market telling us about investor sentiment right now?
The increase in risks means that investors want to pay less for risk because risk is greater. And we're seeing that across all asset classes.
And Sandra, how unusual or dangerous is it for a U.S. president to openly pressure the Federal Reserve the way that we're seeing right now, Donald Trump with Jerome Powell?
This is unprecedented. Donald Trump is the personification of systemic risk because investors usually trust in the independence of central banks. And in the past, for instance, when we look at the crisis of 2008, first of all, we've seen that political fractions work together, the Democrats and the Republicans, and then politicians work together internationally. And most importantly, almost central banks cooperated. And now Donald Trump is undermining the Federal Reserve's independence. The Federal Reserve is supposed to make its policies based on data, based on fundamental macroeconomic insights. And if it were to be pressured by the president, or if the president, worst case, like he said, I can do monetary policy much better than Jerome Powell. If he exerted undue influence on the Federal Reserve, it would shake investors' confidence even more than it is already, and it would undermine the whole global financial construction.
What do you think would happen? How would markets react if the president tries to remove Jerome Powell?
Well, we're already seeing whenever he talks about it, we're seeing increased dramatic volatility. And what I'm seeing with investors here on Wall Street, the sentiment is we need to de-risk, something that you traditionally would hear with regard to emerging markets. We need to reduce our risks when it comes to the United States. We need to diversify more. Also, in terms of currencies, the dollar is not the reliable currency that it used to be. And the reason for the gold price, because you mentioned gold earlier, is also that other central banks are increasing their purchases of gold. And part of it is the are the same considerations that investors have, but also because the Federal Reserve and also the European Central Bank froze Russian assets. And that also shook the confidence of international central banks. That was another factor that U.S. institutions may not be as reliable as they used to be.
President Trump's press secretary said earlier today that Trump wants the U.S. dollar to remain the world's reserve currency. Why do you think it's important for the White House to communicate this message? I mean, that's unprecedented in itself to hear that coming from the White House, but why do you think the president thinks it's important to say that?
Well, I think that's primarily due to the influence of Scott Bessent, his Secretary of the Treasury, because we have seen as soon as investors lose trust in the United States, also as a borrower, that increases borrowing costs. We know the debts of the United States are at a historic high. And so the whole worry, I think, of investors also is, also when we look at Donald Trump's business history, where bankruptcy one after the next, and he relied on banks to bail him out. And the worry right now is that Donald Trump is steering the economy towards a crash and then hopes for the Federal Reserve to bail it out. But the Federal Reserve cannot counteract nonsensical economic policies, basically, I should say non-existent policies, because Donald Trump wants to bring back, for instance, manufacturing to the United States without any industrial policy. We had industrial policies under Biden's, for instance, the Chips and Science Act or the Inflation Reduction Act, which Donald Trump wants to axe. And so it's not going to work. And there's nothing that the Federal Reserve could do, even if it wanted to.
Sandra, one more question before we run out of time. The U.S. president has been very vocal in his criticisms of the European Union. It makes me wonder then, we've seen him in the last few days mentioning on Truth Social the European Central Bank and the fact that they have lowered interest rates. Why is he focusing on the ECB in order to pressure the U.S. Fed?
I think he's doing everything, or he's trying everything in his power to pressure the Fed, including threatening to fire Powell. He has already, in February, fired 2 independent heads of institutions, and they have appealed these firings. So now it's going to go to the Supreme Court. But apart from that, whether or not he can do it legally or not, he's trying everything in his power to influence the Federal Reserve. The ECB has a completely different policy and economic landscape that's not at all comparable to the United States. And when Donald Trump took over, the U.S. economy was a top performer. It was the envy of the world.
Yeah, that is true. Sandra Navidi, CEO of BeyondGlobal. Sandra, we appreciate your time and your insights tonight. Thank you.
Always a pleasure. Thank you, Brent.